It wasn't until we actually started to seek out new knowledge that we're able to pivot and really ramp up our business and impact others, which is the biggest thing for us. We're not only impacting investors, but also the communities we're investing in.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into another episode of the Freedom Point. So glad you're here with us today. I've got not just one amazing guest, but two. I think this might be the first time for the Freedom Point Podcast, having two guests on the same episode. So today I've got Ryan Twomey and I've got Lucas Ravanis with me. Gentlemen, welcome to the show.
Great to be here.
Thanks for having us.
Yeah, absolutely. Looking forward to chopping it up with you guys today. So the reason why I wanted to have Ryan and Lucas on is because they're largely cut from the same cloth. Financial backgrounds, sales backgrounds, very similar story in terms of how they made a transition from, focusing on Wall Street investing and building up that portfolio, transitioning into cash flow type investing, more so on the active side, and then eventually taking that, or making that transition to passive real estate investing because, quite frankly, the realities of being a landlord, whether it be, evictions, late rent payments, endless maintenance, those types of things. And then they were largely able to build up a real estate investing portfolio on the passive side, which really enabled them to escape the dependence on the W-2. So for those that are listening to this episode today, if you want to find yourself there someday, you've got three guys on the show right now, right here, that have done it before. All right. So with that said, gentlemen, Ryan, Lucas, up for grabs. Maybe you can kind of let our listening audience know a little bit more about yourselves, your background, your journey, what you're focused on today, et cetera.
Yeah, you kind of nailed it. So we grew up together. So we know each other since we were about 7, 8 years old. Went through Little League together, high school together, the whole 9 yards. And both of us were at home during COVID. So COVID hits. Both of us don't want to work our W-2 anymore. Life's just kind of miserable. We're working for somebody else. Time's tied up in things that we don't find fulfilling or appealing, kind of the typical story. And so we decided to try to find a way out of that. And that our goal is to start investing in real estate properties that provided enough income every month to pay for our lifestyles to get out of that type of, time suck, essentially. So we started doing that. We were pretty successful. We house hacked our first property in 2021, a triplex in Worcester, Massachusetts. Went great, lived for free, had a little bit extra money to pay for our utilities. We were working from home at the time, so weren't paying for gas and stuff. It was great. We scaled again to a duplex, did the same thing, house hacked it. And then this is about a year and a half in, and we started to find all of the landlord horror stories that you just mentioned, evictions, maintenance, bad tenants, late rents, all the annoying stuff started to come to fruition. So that started to slowly drain all the money we saved because we'd pay for lawyer fees, pay to people, get people out of units, pay for whatever electrical and plumbing was going on. And it was just not sustainable. So having to, save for a down payment when you're still going small like that, using only your own money, became kind of a problem because we were paying for all these other things that had to do with those horror stories. So we needed to make a pivot in our investment strategy if we're going to end up going full time and actually have a true business out of this. So that's when we found a mentor, Tyler Devereaux and MFM, shout out to them. So we utilized their platform and their education system to really ramp up how we're going to approach our new strategy. And that was through syndications and helping others passively invest. So we essentially leveraged our background from the stuff we've learned, which is all the horror stories, but also the success side too, because we saw the power in it, to help others get the benefits of real estate without the headaches of being a landlord. And so we started TR Capital Partners in order to do that. And essentially, we are running a private investor community that helps sales leaders and business owners that grow their passive income and wealth through investing in these large apartment complexes. And a lot of them are fed up with the same things we were. It was, not enough time. Maybe there's volatility in the stock market. They want a more stable way to invest, control their money. They want passive income, like whatever it might be. It's different for everyone, but they're really stretched thin with their day to day, so they don't have time to dive into real estate themselves. And the fact that being a landlord deters a lot of people from doing it, this was just a better solution. So we help them passively invest in these large apartment complexes, and we take care of everything from finding the deals, the financing, the business plan, managing the property, whatever goes into the back end, while they can just sit back and enjoy the returns and get all the benefits of real estate without the hassles of being a landlord. So that's kind of just a little bit about us.
Yeah, no, I appreciate that. And that's a great background. And it's interesting that, your story and your kind of journey, from the desire to escape the dependence on the W-2 to, house hacking your first, I would presume it was a single family, property, to then, moving into a small multi or a duplex and effectively, doing the same thing there, to then, finding a mentor, somebody in your life that, was maybe a decade ahead of you, that had already maybe been, in the shoes that you eventually wanted to be in, to then, finding syndication, and that type of an investing strategy. So really appreciate, you kind of sharing that. And really the most important thing, that I learned from what you said is you no longer had a desire to work for somebody else, right? You no longer had a desire to fulfill somebody else's dreams because you wanted to fulfill your own dreams. And then, obviously getting to the point in your, career where the work just wasn't fulfilling anymore, and wanting to scratch that entrepreneurial itch, and go out on your own. So, really, I'd like to maybe kind of have you explain to our listening audience a little bit more about some of those, really tough moments or those headwinds, actively owning real estate on your own, because I regularly have people in my own life, personally and professionally, that want to get involved in real estate, but they believe the only way to do that is to go buy their own piece of real estate, own, manage it, and hope for the best, kind of a thing. So maybe what were some of those kind of trigger events, that led you down the path of passive real estate investing through syndication?
Yeah, I mean, Lucas can touch on this too. But I think we dove headfirst into real estate. Like, we studied how to get involved and stuff like that. That's obviously with the landlord side, the traditional side. And we just dove headfirst in and started taking action on it, learned along the way. Obviously, we learned the hard lessons, but we also had to benefit from the upside with the actual income coming in at some points too. So I would say, a lot of it comes down to the education. We weren't really aware of syndications or the option to passively invest when we first started. Like Lucas says this all the time, there's an instant correlation to being a landlord when it comes to real estate investing. So that's the path we took. It wasn't until we actually started to seek out new knowledge that we're able to pivot and really ramp up our business and impact others, which is the biggest thing for us. We're not only impacting investors, but also the communities we're investing in. So it's kind of that's like a win-win situation there.
Yeah, it makes total sense. When I think about the word syndication, right? If you were to ask me what that word meant, back in 2015, I really wouldn't have been able to give you a good answer. Obviously from a high level overview, it's basically group investing, right? Can you kind of explain and break down, for our listeners that maybe, have not heard of that word before, or maybe they'd like to learn more about what in fact is a syndication, and why would it benefit me, as a potential investor, to invest using that type of a strategy?
Yeah, I would say syndications it's just a fancy word for pulling your money together with other investors to buy an asset, right? You can syndicate so many different things. We primarily focus on syndicating multifamily value add properties, right? And what it is, it comes down to you only know what you know. And for us, we had to find ourselves in a bad position, pivot to figure out, okay, there's a better way to do this. There's a lot of myths with real estate. The biggest one, in my opinion, is you need a lot of money to get into real estate investing. And that's where syndications come in, because not only do you not need a ton of capital to invest into a syndication, but with the syndication, you are not actively managing the property. It is truly one of the only forms of passive income, and the best form of passive income that I've found. So with the syndication, there's two parties, right? There's general partners. General partners are Ryan and I, our team. We're the operators. We are the ones who, like Ryan said earlier, we find the property, we plan out the business plan, we execute the day-to-day operations, we take care of filling the tenants, right? Every hat that a landlord wears is what the general partners do. The other parties are the limited partners, and those are the investors. So as a limited partner, you are able to invest into a syndication where general partners execute the deal on behalf of you. And as a limited partner, you get to just invest and let us do the rest, right? You get passive income every single quarter. You get your tax breaks from all the incentives that the government gives out for owning. And of course, you get the equity payout, which is the big payday at the end when we sell, refinance, exit that property.
Yeah, that makes total sense. And I appreciate you breaking that down for me. So, there's a lot of similarities, I think, between, actively owning a piece of real estate, whether it be a single family home, a small multi, an apartment community, on the active side than it is on the passive side. There's a lot of similarities there in terms of what the benefits are, and that you receive cash flow and equity, and there's, tax depreciation benefits. But, really the main benefit, I would say, to that passive investor as opposed to that active investor is the passive investor is leveraging the sponsor's time, energy, expertise, network, et cetera, right? Am I saying that correctly?
Saying it beautifully. Yep.
All right. Sounds good. Appreciate that. So, I'd like to really, maybe you guys can share with me, why is it that you guys decided to primarily focus on, that multifamily space specifically, as opposed to maybe some of the other asset classes out there? And within the multifamily space, are you primarily focused on, a build to rent or a value add? What types of, neighborhoods and assets are you typically looking to invest into?
Yeah, Ryan can touch on this in a second, but really what it was is we realized that it takes the same amount of time to buy a 100-unit complex than it does to buy a 5-unit complex, right? But the beautiful part is there's a lot more money in one of those assets compared to the other. So that's why we structure our business plan around value-add multifamily properties. What we do is, in very simple terms, is we want to raise the net operating income of the property. So every property we buy is its own business. So at a high level overview, all we need to do is increase the income, decrease the expenses, and that's through renovations and strategic operations, right? But if we do that, we know the property is going to be more valuable than when we sell, right? So personally, right now, we don't do any ground up development. What we love is already standing apartment buildings that need some TLC, that have bad management, and we can purchase these properties, put better procedures in place to get their rent higher to market, to lower those expenses. And that way we control the value of the asset. And that's what really made the light bulb go off in our head is, when we're doing the traditional stocks and bonds and mutual funds, right? You don't control that. 401ks, you don't control that. This is an asset that we can invest, grow our capital in, but we directly control the outcome of that property. Obviously, there's a lot more that goes into it than this high-level overview, but that's the general consensus, right? And that's why we decided to pivot from the smaller multifamilies to, hey, we can do it a lot larger at a higher scale, take advantage of the economies, the scale. Right? If you have a 5-unit building and 2 of those units don't pay rent, there's 40% of your income gone. If you have a 100-unit building and 20 people don't pay rent, you're still covering your mortgage, right? You're still cash flowing. That's the beauty of what it is that we do.
Yeah, I appreciate some of the things that you kind of highlighted, there, Lucas. Sometimes people don't understand this, but when you passively invest into real estate as a limited partner investor, what sometimes people don't understand is how is it that that asset that you invest into today is going to be worth more in 3 to 5 years from now, right? And it depends obviously on what that business plan looks like to force that NOI growth, okay? Because apartment communities are businesses, right? And those businesses trade at a multiple, okay? They don't trade like a single family home does where you just look at the comps in the neighborhood, right? Now there's certain elements of that in the multifamily space, but they're really trading based on that net operating income and the projected, exit cap rate in that specific market when it's time to sell. So I appreciate you kind of, highlighting that. And also, how do you force NOI growth? Well, it's simple things like, for example, decreasing expenses, right? Renovating units to increase rents, burning off loss to lease, right? So there's a number of different ways that, the operator can do that. So
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investors. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
My question for you is, what really makes or defines a good operator, from somebody that maybe isn't so good? Because we know and understand this in Wall Street, right? There's good CEOs and there's not good CEOs, right? So how do we as, maybe non-savvy investors decide, which operator, we know, like, and trust, and we're confident that they can actually carry out, that said business plan?
I think for us, when we were partnering with other operators, a lot of it, obviously, you want a track record. You want to make sure that they've done what they're saying before. They're not just giving you some brand new business plan they never executed. Anyone could put pretty pictures and numbers on a investor deck and make it look pretty. But that's typically not the case. In the past couple of years, we've seen a lot of properties actually go under or starting to go under because of bad operators. And that's because they took on bad debt. They got greedy when they bought. They didn't set the fundamentals. All of these things are crucial. So there's really a couple of things, right? You make your money when you buy. I know that sounds counterintuitive, but sticking to your fundamentals and not overpaying for a property is going to put you ahead. If you overpay, you're going to be playing catch up the whole entire time you're holding it. That's one. Two is make sure that they focus primarily, in our opinion, on risk mitigation as opposed to growth. We first want to protect the capital. Obviously, we don't want anything to go wrong with investor capital. There's a lot of risk mitigation strategies that go into that. A lot of that is debt. Take on good debt. Don't, buy rate caps if you take on variable debt. Have a plan to refinance. Make sure that you're locking in the best rates, your insurance, everything that goes into the operational side. You want to make sure you're mitigating for the levers that are factored in externally, but also the stuff that you can control internally. There's a bunch of different strategies you can use to make sure that you're lowering the risk of the investment. And then on top of that, obviously, we want to grow the capital, right? That's the main goal. So we want to make sure that when you're looking at a property, looking at as an LP, looking at an investment, when they tell you, let's say we can raise the rent $200 per unit, have market research to back that up. Ask the questions, and depending on how they answer, you'll be able to tell from the operator standpoint if they're actually credible in what they're doing. And then you want to just make sure that they provide you transparency and evidence to back up what they outline in the business plan. So I think, all those things, along with communication, transparency with the investor, building that relationship goes a long way, because it is a relationship business. You're married to them for, 5 to 7 years, depending on how long you're holding the property for. So you want to make sure that you have peace of mind as an investor too, because that's the whole point of investing for this, right? You want to try to reclaim your time through passive income or lower your taxes, whatever it might be. It all comes back to peace of mind. So if you're dealing with someone that you think might be a little sketchy or, can't provide that for you, just find someone else. Find someone you know, like, and trust. So that's kind of a high level of a lot of the things we look for. But there's a lot more that goes into it. And, definitely just do your due diligence if you're going to invest with anybody. So.
Yeah, and Ryan, you're spot on, and I so appreciate that breakdown. There's just a few levers that people can really look at to determine whether or not it makes sense and fits their goals. Even just simple things like evaluating what the cost basis was of the asset that they're choosing to deploy capital into, and where is that basis relative to what the local market is right now at that time with that very same type of product. And just the way that you kind of broke down the risk mitigation side, understanding the debt structure. Does the debt structure match up with the business plan? What about the potentials of increased cost in property management or insurance, and some of those things in that market are all spot on. And there are some very simple ways that investors can really stress test the financials themselves. You don't even need to be a sophisticated investor to do some of these things on its most basic level. And you broke this down so wonderfully. Just take a look at the local competitive assets in that market that are already fully renovated or new product, and the types of rents that they're securing relative to the occupancy of those properties. And if the investment that you're looking to go into, right, with its business plan, has a projected rent growth that's at or above what the local market is getting today, then I would question yourself whether or not that's a good investment or not. Because can those tenants, after you improve the property, can they actually continue to afford to live there, right? That's a really important thing that I don't think a lot of people, look at. So really appreciate you breaking that down. I would really like to hear a little bit more from you guys as to really this journey from escaping from the dependence of the W-2. It sounds so simple, right? It sounds great when we can tell people that we are corporate refugees, okay? But right, the devil is in the details. So I've shared my story plenty of times on this podcast before. People know where I came from and where I'm going and how I got there, right? But I'd really like for you to explain to me kind of the timeline, okay? The timeline of when you made the decision to get out of the rat race, right? And start transitioning into real estate ownership. Then on the passive side, then you got to the point where now there's no longer a dependence on the W-2 because you've got income streams coming in through those real estate investments that you've made.
Yeah, I think it started in like 2020. We were learning the business first. We didn't just jump right in without knowing what we were doing a little bit. So we was just meet up during COVID, like maybe every couple of weeks. He lived right down the street, so it wasn't that hard to do. We would figure out where we wanted to be. So clarity was a big thing. Obviously, the overall goal is to escape the rat race, the W-2, but clarity and like what that actually looks like was a huge thing. And then it comes down to implementing how you're going to get there. Obviously, we know the why. The why is to not be tied up with other people's time, build something for yourself. So it really just came down to breaking down the steps how to get there. Like I said, initially, we went through the traditional route. We started getting triplexes and duplexes. We house hacked, which was very valuable for us as far as being able to save our own money and reinvest that into other properties. So that's somewhere where I'm happy we started in that position because we were living for free, which gave us a lot of opportunity to actually keep growing. And then, from there, we just had, as I said, once those pitfalls and those hard times did come a little bit, we knew that we had to make a pivot and we had to essentially have a new outcome we wanted to achieve and create clarity around that. So it really was a learning curve along the way. We're still learning every day, obviously. But it all started with just making sure we had clarity on where we want to be, educating ourselves on how to get there, and adapting throughout the whole entire process. And it's not going to be, for anyone looking to do this or looking to invest, it's not going to be a linear growth, exactly what you expect step by step. It's going to be a roller coaster. So you need to adapt along the way. And when new information comes, make the pivot if you have to. And Lucas can probably touch on it a lot more too.
Yeah, like when we first started, in 2020, we knew our end goal, right? Our end goal was we do not want to be working for the man anymore, right? We want to establish our own lives. We want to be putting our effort and energy into things that are going to directly benefit us. But it's like, how do you get there, right? And it really comes down to having, the right mindset, right? Making sure to understand, hey, like those limiting beliefs are only internal. If other people can do it, we can do it. There's a playbook for everything. And I'm a big proponent of saying there's no reason to reinvent the wheel. So what we did is we put ourselves in positions to learn. We joined a mentorship, right? We found out other people who were doing what we wanted to do. We signed up for their newsletter. We saw what they were doing that was working for them, and we implemented it. And with our end goal in mind, we implemented hundreds, if not thousands of tiny little goals along the way to get us to where we needed to go. So if you're looking at a big picture in 2020, we got to quit our job. Well, that's scary. But if you see the big picture and you can break it down into how we're going to get there, what do we need to do? What do we need to learn? Well, when you start crossing off those lists, you realize that the light at the end of the tunnel is actually pretty closer than you think. And that's what it comes down to, right? Mindset and goal setting. If anybody can do it, you can do it.
Yeah, I think that's so powerful, what you just broke down there. And I think it can actually be applied in just about any area of business or even in your own personal life, right? You really have to, have a sense of clarity. What are those goals? Challenge the traditional mindset, whatever that looks like, right? Being nimble, being willing to adapt, being accepting of the fact that we're going to make failures and we learn through those failures, right? Or learn through those trials. But at the end of the day, you guys took daily action steps to get you to where you wanted to be and now you're there. And I'm sure that you have greater visions and greater goals, for the future. And so really looking forward to, watching the two of you guys continue to grow and expand, in your endeavors. So I do have maybe one or two more questions, that I'd like to ask. One's really for that newbie investor, which I'm sure you guys talk to plenty of them. They've never invested before as a passive investor in a real estate syndication. Their knowledge of investing is what their parents told them, what their uncle told them, or what their financial advisor is telling them, right? What are some of those maybe mistakes that you see those newbie investors making, at least from a mental mindset, before you have that opportunity to kind of help them recalibrate?
That's a great question, and I actually talk about this a lot. So this kind of goes back to your previous question about what makes a great operator. Just as limited partners should be doing their due diligence on the GP team, the GP team should be doing their due diligence on the investor too, right? It's so incredibly important to make sure that whoever that investor is has the same goals and vision in line as what you're trying to accomplish as a GP team. So I say that because I love saying, hey, syndications, investing in real estate, this isn't a 2021 GameStop play, right? This isn't, I'm going to get rich overnight. If that's what you're looking to do, this is not the right investment for you. And I probably don't want you as an investor because I know it's going to be a hardship for the time we're married for the life of that property, right? What is your goal? That's what the investor needs to figure out. Are you looking for passive income? Are you looking for time freedom? Do you need tax benefits to hold on to more of your money, right? What is it that you're trying to accomplish? When we can figure that out and realize we have a solution to that, that is something where we can get married and we can work together, right? But it's so important to make sure that everyone's goals are in line, because if it's a get rich quick scheme, this is just not the thing for you, right? This isn't what we want to be a part of. This is a long-term game. It's a relationship game. It's not a invest and I'll never talk to you later game, right? That's not how this one works.
Yeah, I think for me, as far as like the newbie investor, my advice would be figure out if what you're doing now, so probably the traditional route that we've talked about, the 401k, the stock market, figure out if that's even, working you towards your goal in the end. For us, we knew we wanted to have enough income to not have to rely on a job. So us investing in the stock market or in a retirement accounts, that was just not even, remotely the right thing to do. So we pivoted, obviously. Real estate's become a big hot topic because of affordable housing, everything that's going on in the market, nationally, locally, whatever it might be. So first, educate yourself, but make sure that your investments are even like fulfilling your goal in general. For me, so my dad got laid off when I was in college, and he did the whole traditional thing. He did everything right along the way, over saved in his 401ks and stock market, stuff like that. But once you get laid off, your income's gone, right? So therefore, you have to go out and find other jobs, and kind of, again, rely on someone else because of some external thing out of your control. So that's another thing for me, is I want to have control over my lifestyle, regardless of, if I'm working a job or not. And that was also a reason I needed income from my properties. So there's other ways you can invest. It doesn't have to be real estate. I would say just make sure that what you're investing in is actually supporting your overall goal. And in most cases, it's not, in my opinion, from people I've talked to. And that's why they want to make the pivot in the first place.
Yeah, makes total sense. And boy, Ryan and Lucas, I've really appreciated the tremendous value that you've brought our listening audience today. I'd love to give you the opportunity to share about how maybe we can learn more about what you guys are up to and connect with you further.
Yeah, we're both on LinkedIn. We post pretty much every day. That's kind of our go-to spot to keep people updated. Post a lot of educational content, any webinars or properties or events that we're hosting. We're also big into networking and meeting people that are looking to invest, but also people in the industry. So feel free to find us there. You can also find us at trcapitalpartner.com. That's our website where we'll have a bunch of resources, blogs, past webinars, ebooks, everything you need from the investor side to actually educate yourself and figure out if this is the right move for you, as well as some case studies of past example deals where you can actually see how it would impact you as an investor. So you can contact us there. You can join our investor club, or just submit the contact us form. We'll get in touch with you, schedule a call, and see if it might be a good fit. But yeah, those are the two main places I'd say to find us, unless I missed one, Lucas.
Nope, that's good. I'm the only Lucas Ravanis that I know of that's online. So if you search that in Facebook, LinkedIn, Instagram, you'll find me. And then, as Ryan said, trcapitalpartner.com. If you found what we shared interesting, we recommend joining our investor club. It's a free resource. You don't have to invest, but it's a great way to stay tapped into what we're doing, get access to all the resources and education that we're putting out there to get you ready if it is something that you want to pursue in the future.
That's great. Well, I appreciate that, gentlemen, and I'll definitely put the links in the show notes for this episode. Guys, thank you for bringing the heat today.
Thanks for having us. It was a great conversation. Happy to be on.
Absolutely. And listening audience, thank you again for jumping in to another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.